All right, so we wrapped up a pretty strong month of November with a little bit of a downside move today. It seems like the market didn't really have too bad of a news. It just didn't have enough good news from a vaccine standpoint, which we actually got today, to keep us going. So it's been kind of the trend. Starting on the 9th, the Mondays, there's always been good vaccine news. And Monday, the 9th, we really took off. We weren't able to hold it. And the reactions have gotten more muted since. So I'm going to break that down into what it translates into now as we head into December, what to expect in the short term, and does this impact any long-term bullishness that we have had in the stock markets going forward. What are some of the signs in the short term on a technical basis that can impact where we expect price to move, our expectations there. Those are all the things we're going to talk about and take a look at, what drove the market today. A little opposite of what we've seen over the last few weeks. So let's go ahead and get started. Today is Monday, November the 30th, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, I did really quickly want to mention that our Black Friday sale ends tonight at midnight Pacific time. So I just wanted to reiterate the way you do that. We did have some questions about how to subscribe. If you come down here, use the Black Friday coupon code right here. So where it says have a coupon. Now it won't work tomorrow, it won't work after midnight tonight, but that's where you can use it and get that 20% discount off our services. Remember again, when you look at what that gets you relative to our monthly subscription, which is $99 a month. That's our typical. That gets you that gets you the access here. That gets you access to $99 a month to all of our trading rooms and our Market Outlook live videos, among other content that we post on the site every so often. But the premium subscription, when you have the 20% discount, that actually comes out to 20% off of that $3,000 there. That brings it down to $66 a month with the discount. So for basically a third off of the monthly price, you're getting everything, all those trading rooms and the Market Outlook live videos, all of that free subscription, free content, and all the premium content for a third less, basically 2/3 of that price. So it's our best deal. We only do it once a year, and it's been going on all week. A lot of people have taken advantage of it, so we just want to make sure that you knew one last time here, and just a reminder that that coupon code expires tonight at midnight Pacific time. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator, as we always do. And you can see how a little bit of a down day today, not as bad. We didn't close at the low. Obviously, we came up throughout the rest of the day and finished actually near the high of the day that we had very, very early on. Nonetheless, the near-term line, the momentum line rallied because of the long lower shadow. The near-term line dropped because we've had now 2 out of 3 days to the downside, and we're really not getting going here. Remember that I mentioned on Friday we had that high point from November the 9th, and we've been unable to close above it. We got really, really close last week on Tuesday, and then on Wednesday, and then Friday, and today we've been unable to get above it and stay above it, close above it and stay above it. Market, the intermediate posture is strongly bullish, so we have dark green shading and a green line. Obviously, we're pretty well off that 30-day moving average. We can be well off 30-day moving average for a while, so that's not too big of a problem. If you take a look at how far up above the 30-day moving average we are, obviously I showed you on Friday the Russell's way off of it, but when you look at the S&P, it's not exorbitant. It's just a few percentage points, and it's actually kind of rolling over. It had peaked over here on November the 16th on another day of vaccine news there. We were up about almost 5% above. It appears to be we're rolling back down now to the downside. So we'll just kind of keep our eyes on that and see. Not surprising that we get a test of the 30-day moving average. Which would bring potentially light pink shading, maybe a yellow line, or both. But that would actually be a pretty bullish sign, depending upon how quickly we got there and things like that. So it appears to be that that's the mode we're in right now, is we're kind of grinding our way towards we're kind of grinding our way towards that level. As you can see, we are above the September 2nd high. We were kind of stuck in that stage. We broke out there above the 78% level. We broke out above the 100% line. Didn't hold it initially. Broke out it last week with a cluster, and so far we've held that breakout. So pretty decent opportunity for the S&P to kind of get going here without really much of an intermediate decline to speak of. I mean, we dipped our toe underneath the 23% level for 2 whopping days during this entire intermediate decline. So not the big, not necessarily relatively pretty shallow exhale that can have its ramifications here eventually as we take another inhale here as to how long this inhale will be. It's kind of hard to take a deep breath in and then have a shallow exhale and then take another big deep breath in. Usually we take a shorter inhale, and then we take an even bigger exhale because that's just how it works, right? So we'll see if that ends up being the case here. Let's take a look at the Russell 2000. It actually had a little bit more of a down day than its peers. Its near-term line did drop below 50. We talked about that divergence. The target for that divergence is down here to the 1766 level, to the low point in between the two highs, the divergent highs. So that's kind of the first level. Of course, breaking through that now will most likely suggest that we're at least in a weak bearish mode. But you notice we got light pink shading the yellow line there after a test of the 30-day moving average, and now that's kind of the expectation here. Though this is a pretty bullish pattern, so there's an opportunity we might just bounce like we did here, we just might bounce right back up and move up higher again. Very similar type of pattern. It occurred on 2 different days here, and then of course over here the near-term line didn't get there, but both of these were intermediate confirmation signals with the momentum and the green line in opposite reversal zones. We got that again here. This time the near-term line is also below 50, so which is pretty positive sign from a bullish standpoint. So we can bounce right off of this, similar to here, or we'll continue. The difference between now and these other couple of times is we didn't have a divergence coming into it like we do now. So that's a pretty significant difference. And the near-term line, absent a dip, a toe dip there below 50, the near-term line has been pretty much, this is kind of one big long intermediate or near-term run that we might finally be kind of shaking out right now. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That lets us know you liked our video today and you want us to do another video again tomorrow. If you don't like our videos, you don't have to click on anything. You don't even have to watch our videos. But if you do like them and you want to let us know, we really appreciate it, and you can do it with one click right there on that thumbs up. Also, while you're down there, comment. What did you get out of our video today? What stood out to you? What did you pick up? What questions or comments do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. And join, there's my handle there at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, I invite you to check out some of these other things here. You can see with the recent subscribers that we have to our premium, a lot of our premium posts are over here on the right. For you new premium subscribers, a lot of your resources are right here, as well as the access to the class forums that you have access to. Of course, our premium and our plus subscribers have access to our Market Outlook live videos. They're linked here under the Market Outlook, as well as you click on this icon. If you come down here to the bottom, come down here to the Twitter and Facebook posts. Click on this heart. It opens up a new window. Hit that like button right there. Come over here, hit the thumbs up on Facebook. Same thing, it opens up this page. Hit that like button. Again, the more you do that, the more we benefit, because our posts will be seen by more of our followers. Twitter and Facebook don't show our content to all of our followers. That's just how their algorithms work. So the more engagements it has, thumbs ups, comments, likes, then the more it gets viewed. It also benefits you because they only promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, now let's take a look at the weekly chart and how the weekly candle is starting out for the Hakinyashi candle. You can see it's a slow grind up. At least it's a higher close as of right now. We're obviously down a little bit today, but not much, only the 36.21. The low point is 35.68. So that's still quite the move for us to get a lower shadow. So we got a higher close so far. We're just one day into a week. We don't have a higher high yet, so we'll kind of keep our eyes on that. And then no lower shadow. That's kind of your three things you look for to for this bullish trend, or for any signs of weakness. And so right now, the only sign of weakness is that we don't have a long higher high yet. We'll see. We'll see how things shake out. Remember, we still do have a pretty darn high PPO. This is really, really high here. In fact, if you take a look at it, here, let's just go 1040 here. In the last 3 years, we're in we're in the highest level, one of the highest levels that we've been in the last 3 years. Maybe this one was a little bit higher, 6.89. We're at 6.88. So, that was in January. That's as bullish as we've been in the last 5 years. Excuse me. In the last 10 years, we are in the 95th percentile. So it's been that one time there. It doesn't look like we were ever more bullish there, but it looks like here in 2011 we had a few weeks where we were more strongly bullish, and we just kind of went sideways there. So, needless to say, we are pretty strongly bullish right now on the PPO. It's not like we haven't been here. There's been a few instances, but it's hard to start new runs from here. It doesn't mean we have to drop. And this took a while before we dropped. Had a little bit of a head and shoulders pattern there. And this one we dropped a little bit quicker. But you can see it was one big drop, and then we took a few more weeks on the Hakinyashi level to get the PPO down. But then we got a good new intermediate run out of that. So, again, don't expect a big new intermediate run to come out of this yet, just because of how high that PPO level is. Let's take a look at the 3 green arrows, and you can see a little bit of a bounce in volume. Not surprising. We had a couple really light holiday volume, and now it's kind of made up for that. Even though we didn't get much of a move, we did get a red arrow on the MACD, which means the MACD itself came back down below its moving average. A little bit of a divergence there as well. And then the stochastics has been kind of going up and down, really not going anywhere, but it's still got a very high stochastics level. So you can see, that's a pretty strong trend there. Let's take a look at some of these other oscillators here, and you can see, we're not bearish here. We're still above 60, but you notice we're not really extending anymore. The directional movement index, we're still above 30 on the positive, but we just never could get below 20 on the negative index, which is why that directional movement or the average directional index never could get above 20 itself, which is when you really get a good directional move started. So hence why we're not really too bullish or expecting a directional move yet, because we really can't get going here with that negative index particularly dropping down. If you take a look at the Bollinger Bands, we're at all-time highs, so there's no volume up above us. We are kind of building up some volume here up above the value area, and we are above the value area. So any kind of decline may pull us back to 345, but may pull us to the top of that value area. You wouldn't expect, especially with such strong volume support just underneath it, we wouldn't get a significant dip below that. The trend strength indicators are in the moderate strength level almost. You have to get above 2.5. We're not quite there yet. Or excuse me, above 2. We are actually quite there. We are there, just barely, and we are above 65. So we do have a moderately strong, but as I mentioned to you before on IWM, when you're this far away from that blue line, it's hard to, again, extend further, right? You get pretty, you can extend away from the blue line. It's hard to, it's not indefinite. You usually come back, because the blue line is the midpoint of the 26-day range, and things return to the mean. And as you can see, when you're far up above it, you tend to come back down to it, even if it's rising by the time you get to it. So kind of keep that in mind. Despite the really strong trend it has right now, a little too far ahead of ourselves. Usually we kind of grind our way up, and that's kind of nice because then you can just kind of go sideways while the blue line catches up. But here we haven't been grinding. We really popped up pretty sharply, and that's put quite a gap there between those two in that space that can be filled in on any kind of exhale. All right, when you look at the intraday moves, you can see, we filled in the rest of that gap from Friday. That gap from last Tuesday is still there to be filled in. We didn't quite get down there. Started to a little bit early this morning, but especially once the European session closed, you can see right about here, you can see we rallied up actually to the end of the day. So kind of keep your eyes on that one. I mentioned 345 as a possibility. That's the midpoint of the range. That's that gap from over there on November the 5th, which would still need to be filled. This one hasn't been filled in yet from the 13th. So there's still quite a few gaps. And remember, this was that Thursday gap here where the QQQ had already filled it in, right? So this one, that gap on Thursday has already been filled in, obviously. Hasn't been filled in on the others. So kind of keep your eyes on that. And for the Qs, it would be the 11th gap that we can come down to the midpoint of its range. I mentioned IWM and the decline it had today. Again, there's the gap from last Monday. We've got this gap from the 13th that it can fill in as well. And then, of course, there's that Thursday. This is actually the Monday of the 9th gap. And then there's the Thursday gap. So that's kind of the opportunity that IWM has to fill in. And you can kind of see where each step, especially this one here, the point of control, if we might in a very short term come down to that level, breaking that level is what would get us down towards these areas here and catch us down to where the QQQ, the Qs had gone down to already. I mentioned today's volume picked up 83 million shares, but the trading range didn't. It stayed below average. So when you look at, and right about a little bit more than 1%. So when you look at this chart here, we're still dropping. We're not breaking below 1%. That's when the trend is kind of established, right? And we're good to go here. Kind of like that ADX rising above 20, this dropping below 1%. The volume is down. It's pretty darn low as it is. The ATR is still relatively high though. And then you look at the VIX, and as I mentioned on Friday, the VIX is still above 20, right? It's, we had a bump up, it pulled back the rest of the day, stayed at the 85% mark, but still on an absolute basis pretty high, breaking below 20, another sign that this trend is established. Bouncing up off 20 to the high 20s, a little bit of an exhale, right? And that's probably the way I'm leaning right now is that's the kind of move that we'll get because even today, as you'll see here in a minute, small caps, which had been the leader through this whole period, starting to show little signs of weakness. So before we move on to some other elements of the video here, just to review my technical outlook, we've been bullish, little weakness today, very well could lead to a little bit more weakness throughout the rest of this week into December. Very good chance of that happening. Obviously, from a seasonal standpoint, you don't expect weakness in December. But considering that we've had, especially on the small cap index, probably the best November it's ever had, would not be surprising to get some sort of exhale that you normally would get by the end of the month to bring that month in total down, return total down to normal levels. But we didn't get that. So good chance that there might be some kind of exhale following, especially for small cap index, what was a very, very strong November. So what do you think? Do you agree with that? Do you disagree? Let me know in the comments section below, especially if you disagree. What do you see that suggests either why you're a lot more bullish now than I am, that we're going to just keep on going from this strong November into a strong December, or that you're a lot more bearish than I am, that it's going to be more than just an exhale. So whatever's dictating that to you, what are you looking at? Share that with us in the comment section below. All right, now let's take a look at how things perform. I mentioned small caps had a day today. Well, so did emerging markets, so did international stocks. They all kind of dropped. And if you just take a look at just today, Not surprising, they had a very strong month, right? So if you just look at just today here, they had the biggest declines. 2.5% down for emerging markets, 2% for developed, almost 2% for a small cap index. Of course, the QQQ, which for some odd reason we don't see here, kind of led the way higher. I don't know why we're not seeing the QQQs. Yeah, there's Qs. Oh, here we are. We don't have the data point there. But you can see the Qs held up very, very well while everything else declined. So this is kind of a 2-day, including that half day on Friday. Down a couple percent. That's a pretty decent drop. Commodity prices as well dropping, and your safety trades. The dollar was slightly up. Gold, interestingly enough, had a pretty decent decline, and then of course a big strong rally in the large cap tech names that lifted us up. So if we take a look at how some of these things performed, let's take a look at gold first, and you can see the decline it continues to have. So it's in dark pink shading and a red line. That's not like, I mean, that's, it's a risk on type of a trade, but it also is suggesting of a strong dollar. And if you take a look at like the euro US dollar, that was a strong, the dollar was relatively strong today, especially that's a pretty bearish candle up there. Long upper shadow as well. We tried to get above that 78% level. We closed up above that last week, but then not able to hold it yet so far. So kind of keep our eyes. Again, strength in the dollar is not necessarily the most bullish sign. And we saw that gold is exhibiting kind of that idea of strength in the dollar. Commodity prices got really extended away from its 30-day moving average. It's starting to pull back a little bit. And then, of course, the 10-year yield, light pink shading in the yellow line on Friday, bouncing up just a smidgen today. But you saw TLT. TLT had a pretty decent run in the last couple of days, really. And so we have, dark, light pink shading here with the intermediate line now falling again and a yellow line. So we'll see if it turns back over, or are we going to pop up and turn into some dark green shading and green line, which we already had some inklings of here at the beginning of last week. So pretty significant moves in some of these different asset classes and how they're performing. If you take a look at the major markets that are out there from a developed and emerging market basis, you can see, we are so far away on especially the developed markets. To get that far away from the 30-day moving average usually means that you're gonna exhale back down to it. Doesn't mean you have to, and we don't know how it's gonna go, but you can kind of see how we got a little too far extended away. Not so much in the U.S., a little bit. We got an overbought cluster. Not so much in China, has gone sideways, but especially in some of these other areas. Even Canada, Brazil had made a run. Look at Italy and South Korea. Even though China went flat, South Korea didn't. India is doing pretty well. So don't be surprised if this exhale globally brings us down to these levels, and that impacts U.S. stocks. All right, if you take a look at these sectors, you can see, again, not surprising, what was working here lately had, finished November with a little bit of a dud, right? We pulled back in the energy area, and again, for some odd reason, it's not showing the beginning of the day today for some of these, but going through to Friday, you can see financials down, utilities down, energy's down, industrials are down, real estate's down, materials, and technology and communication services and discretionary kind of leading the market with healthcare. So not surprising, right? Because that's been the big leader. And so we saw that in June after the market peaked in June. Those areas, small cap areas that did so well, they pulled back the most. And so don't be surprised if we don't start to see some rotation out of those. I like to share this chart from stock charts, the relative rotation graph. You can see materials and industrials are starting to lose some momentum, and utilities losing momentum. Staples losing momentum, real estate dropping. Energies got some very strong momentum, but it's really kind of over there with some weak relative strength. It's had a nice little run right now, but you can see it's losing momentum. Financials, industrials, materials, healthcare is dropping, utilities, and real estate really dropping down to the left, with technology and discretionary leading up to the right. And so again, that's what's been leading here for the last, I don't know, 20 days or so, coming off of that low point right there, and really even all the way back to here. You can see, you can see how, we had, here, let's do this. I'll actually do that. And here, let's go to 10 days. So those areas did really well there. Everything was up to the right coming into that low point, and they stayed bullish while some other, like technology, was weak, and discretion, communication services, they stayed in the red here. They jumped a little bit, but then they pulled back down again as we've rallied here. You can see utilities, energy, financials, industrials, real estate, all ramping up to the right, and they're starting to roll over and go down to the left. And so, again, that would be, very similar to what we saw over here. When we hit that June, you see how when we hit that June peak, they were doing the same thing, and they rolled over and went down to the left as we pulled back by the end of June. And so I expect with technology and the communication services moving up to the right by the time we got to the end of the month, so they were bullish and led the strength initially higher there up to that peak in September, where those three areas were your strongest sectors again. So that's the kind of move I expect to see again. Maybe not exactly like what happened in June, but something very similar here. All right, so now let's take a look at our trade idea of the day. And one stock that actually kind of broke in a sector in an industry that really broke out today was AMD. If you take a look at it, nice, good breakout day. We got a strong intermediate run here, dark green shading, the green line just starting, almost to a cluster there. If you take a look at the long-term chart on the 1040 cross, you can see you've got a PPO that had been pulling back and is now starting to rise up again. Might limit some of the upside to it. You take a look at its three green arrow charts. Obviously, we have three green arrows and a spike in volume today. So a good spike there. You look at some of these other indicators. We have the beginnings of a directional move with the ADX really jumping up and making its way towards 20. You look at its RSI and its CCI. The RSI breaking well above 60. Very good breakout there, and almost getting up to positive 200. So good breakout of this sideways action. You can see on the Bollinger Bands, we got through the upper Bollinger Band. We're above the value area. We got through this volume node. It's got some opportunity to make a run. So what we've done, what I've done on this stock is, let's see here, we have bought the 105 call option. It's out of the money because we're trading right now around $93. You can kind of see where we're at right here. We're trading right around $93 there. So it's an out of the money call option. But if you notice here, we sold the 110 to keep the cost really, significantly lower. So from a reposition size for half a position, because it's a pretty directional trade. But if it makes a run up to 110, so up into this area by January expiration, then we get a 5-to-1 reward to risk ratio at the worst case scenario. So $2,500 of reward for about $500 of risk. And that's if we take the full risk. More than likely, we'll probably take a few $100 because we're pretty darn close here. If we pull back down below this 8-day moving average that we're kind of pulling away from now, if we pull back down there, then we're going to be out of this trade. It's not making a move fast enough for what we want to see. But if it can follow through with today's breakout and stay and ride that 8-day moving average all the way up to 110, then we have a good opportunity for a good reward to risk ratio. Alright, so that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new threads there with any questions or comments you have. Reply to anybody else's questions or comments. And let's keep this conversation going in between videos. As always, thank you for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon and like us on Twitter and Facebook too. And comment on our video. Our Black Friday sale ends tonight at midnight Pacific time. So make sure you take advantage of that. We really appreciate all of you that have done that this week. It's been quite the response. Very similar to previous years on Black Friday. So we really appreciate that, and welcome to those of you who are joining our community. Have a great rest of your Monday night, everybody, and we'll see you all next time.